What's happening, y'all? Hey, y'all know Miss Sweetie was in here chastising me just now. Talking about so you on? I say, baby, me and Mo talking, baby. We trying to conversate. Y'all. You see, y'all don't know. Yay. That's my sweetie, but she be on me, man. What's up, everybody? We gonna give folk time to tap in. Give folk everybody pulling up on IG. Y'all know what to do. Go to YouTube. You know what I'm saying? Today, we not doing the week ahead. We ain't doing the week ahead today. We got the homie modem pulled up. The homie modem pulled up. He gonna bless us. You know what I'm saying? I done got old. I don't be sharing no knowledge no more. Y'all know it's just jokes, man. These just jokes. If y'all on IG, pull up. While we waiting on the cousins from IG to pull up, y'all make sure y'all drop in the chat so I can holler at you like Michelle Tucker. Michelle Tucker, one of the new members of the Spider Gang, and she stay pulling up. She making y'all look bad, OG cousins. Hey, man. Hey, we today we ain't gonna do the week in advance. Oh yeah, the pleasantries. I got to get the pleasantries out of the way. For those who do not know me, my name is Timothy Lee Rogers Sr. I get on Al Gore's internet every day, Monday through Friday at 9 a.m. Eastern Time and 5:30. 6:30 p.m. Eastern Time if I get my times together right. And I just talk about the price action in the market. In the morning, we look at the overnight price action and decide what levels we looking at, what levels we gonna try to trade. Then in the evening, we look back. We take a look back. We be like, whoa, let's look back and see if we was right, incorrect, real right, real wrong, all right. And we just review the price action for the day, and we do that every day, Monday through Friday, 5 days a week. On Sundays, we try to do like a week for looking forward, what we expect of the week. But today we got us a very special guest. We got a very special guest for this. Oh yeah. And I don't charge for this stuff. The reason why I don't charge for it, because every course I ever took, nobody ever held my hand after I went through the material. I was like, okay, I done learned all this great and wonderful stuff. Now, how do I put it into effect? You know what I'm saying? But all of that always came with an extra cost. I ain't knocking nobody who charge for nothing. Charge, make your money, charge people for your time. But I said, you know what? I just want to do it for free. I want to show people what a trader look like. I want to show people what an investor look like. And if you enjoy that, man, press the like button. That's all I ask. Press the like button and share it with a cousin. Share it with one cousin you like and one cousin you don't like, because we want everybody to get this information for the free 99. So today, what we got going on today, Spider Gang? Y'all see this man right over here, the man with the beard that look better than mine. This gentleman right over here with the hair that look better than mine. Look here, man. I'm telling y'all like this right here. This is all based off my arch nemesis, the dummy himself, Mark from Trading with a Dummy. This is all based off of him. Y'all know Mark can't do nothing right. But one day I was looking at Mark's channel and I saw this handsome fella over here with the nice beard and the beautiful hair. And I was like, man, this dude sound like he know what he talking about. Then I figured out Mark don't know nothing. Mo behind the scenes doing all the hard work, just like Pinky in the Brain. You know what I'm saying? Mo doing all the hard work and Mark taking all his intellectual property and putting it out on the internet like he the one who know all of this. This is the guy. This is the guy right here. This is Mo. This the homie Mo. Mo, he like a lot of us, man. It's like this stock market thing fell in his lap during the pandemic, during 2020 time frame. He like a lot of us. This stuff fell in his lap. But guess what? A whole lot of us, when it fell in our lap, we ain't know what to do with it. We sat there and instead of investing the time to learn it, investing the time to figure it out, and then actually execute, we sat there and we still wanted somebody to do it for us. You know what I'm saying? But this man right here, he figured that thing out, and guess what he did? He started helping other people. He started helping other people figure it out. So he done pulled up on us today. He got this community called OTB Clubhouse. I know he got a really exclusive mentorship that for some reason he let Mark into the mentorship. I don't even know how he can stomach this man. How can he stomach Mark like this? But he let Mark into the mentorship. But he got this group called OTB Clubhouse. We'll talk to y'all a little bit about that a little bit later on. But Mo gonna come on right now. It's my understanding that supply and demand is his bread and butter.
Yeah.
Y'all know I don't understand supply and demand. Y'all know I don't understand trend lines. Y'all know I don't understand all them patterns. Shout out to cousin Zay who be doing the chicken wing, the W, the flying hawk, the crouch tiger, hidden dragon. Shout out to Professor who be doing the trend line, slant line, trend line, the Hikinashi trend line, and then Mo be doing the supply and demand with the rectangle in the box and all that right now. I don't understand that stuff, but guess what? All that stuff, all of my kissing cousins, they all bounce off the same thing, the price action. So if you can master your strategy, you can be profitable in here if you master your strategy and stick to your risk management. Risk management is the key in all this. So I'm gonna stop running my mouth. I'm gonna let the homie Mo from I done changed my screen. I supposed to have this right here. I supposed to tell y'all already. This Tim's Tidbit takeover for 717. And then we gonna let the homie Mo with OTB Clubhouse come to the stage and break down some stuff about supply and demand. Now, if you already know supply and demand, just stick with us. Cause Mo, he's a man of my mindset. He gonna pretend like you don't know absolutely nothing and gonna start at the basics and then walk you through a few gems. Mo, the floor is yours, my guy.
Awesome. Thanks, Tim. Thanks for roasting Mark. That's one of the perks with hanging out with you, eh? All right. So Tim said something very, very amazing, and he said risk management is key. And before I get into supply and demand, I want to talk about something. There are a million indicators, including a couple that Tim taught about, trend line, candlesticks, and all that. They're all great, right? They all work, but without risk management, they all fail because nothing is foolproof. And what you need to do is find your edge within this, right? I know people that do better than me, and they know 10% of what I know because they have an amazing risk management and execution. And it's based on how much discipline they are in their field, right? A lot of them have a lot of experience. They understand emotions kick in. So supply and demand is just an indicator, and by itself, it's nothing. When you apply your edge to it, it will become everything. And for me, quick story, I started around March when COVID kicked in. Before that, I was trading stocks, and I got into stocks when Canada legalized weed. So got in and made a good money and then lost it all because we went from bull market in weed to bear market. I saw Tilray go from 280 to 90 in a single day, and every single guru on Twitter was like, buy the dip. And people averaged down from 280 to 90. You can imagine how much money they lost. So Tilray got triggered 3 times, and then the circuit breaker went off and they stopped trading until the next day. So I've seen that, and which is why I keep having this conversation, Mark, where, hey, the bear market hasn't even started yet. You're going to see when we see panic selling, it hasn't started yet. So moving on to this, I used to trade with support, resistance, MACD, trend lines, everything, right? And the issue I kept having was I would get kicked out and the stock would reverse, right? And then the other issue I kept having was that these indicators were lag indicators. So the only two things that are lead indicator are price action and volume. What's the difference? Lag indicator, they happen after. So give you an example. If you work for a corporation or a company, your sales number or lag indicator. Your lead indicator would be how many times you ask the customer for an upsell. So that's a behavior. In trading, lead indicators are price and volume. So I wanted to look at something along with that, because with MACD, what is MACD? It's moving averages, right? And let's say we take 10 and 20. 10 moving average is giving you an average of 10 candlesticks on whatever time frame you're looking at, and 20 is giving you on 20 candlesticks based on whatever average you have, right? Now, we're scalping on 5 minutes, we're scalping on a weekly. You got to be precise. And not saying they don't work, but sometimes it's lagging, meaning by the time you get that 10-20 crossover, meaning the trend is changing, it fakes you out and takes you down. So it's very important that you're watching price action. So I started using support and resistance. Support and resistance was happening. let's say me and Tim sit down, and this is just an observation, and we're like, oh, let's draw support and resistance on Apple. I can guarantee you, depending what time frame we're using. I think Tim, you're muted.
Say
Can you
again.
hear me?
Say
Can you hear
again.
me?
Yeah.
Okay, perfect. So let's say me and Tim are drawing support and resistance on Apple in 5 minutes. There's a very high likelihood we will get different support and resistance, because what is support and resistance? It's basically touching a point two, three or more times, and everyone has a different definition of it. And same thing with head and shoulder. You might see a head and shoulder on a 5 minute. I might see an inverse head and shoulder on a 30 minutes. So a lot of this is very subjective and it's lagging. So I started looking for answers saying, hey, what can I do where I can get something that's leading, meaning I can see real time. And that's when I got into demand and supply. Support and resistance basically previous areas of price where we have either acted as resistance or support. Supply and demand are fresh areas. So if you're doing intraday trading, you're forming those demand zones and supply zones live, real time, which we're going to go over today. But before I get into the chart, a quick description of what supply and demand look for a layman. So let's say I'm Bank of America, right? And Bank of America is like, hey, I want to buy Boeing stocks at $200. Let's say I want to buy 10 million worth. And 10 million of influx of volume is going to increase the price of the stock. We know that. Now, Boeing is not going to do a market order. They're going to do a limit. Sorry, Bank of America will do a limit order for Boeing. So let's say they put a limit order of 200 to buy 10 million worth of shares for Boeing. That now becomes a demand order, because what's going to happen is when that order goes through, let's say Boeing's sitting at 205, every single time Boeing goes down to 200, those orders will get filled at 200. Now, I don't expect 10 million to go through at one go, because there's normal demand. This is just influx. This is separate that came on. So every time it gets to 200, you're going to see a bounce. Our goal is to get in there. Reverse supply. Now, let's say Boeing got in 200 and they're saying we're going to get out at 220. So they put a limit order of 220. That now becomes a supply zone, right? So every time it gets 220, you're going to see it fail. And this is all demand and supply is. It doesn't mean always buy a demand. It doesn't mean always buy a supply, which is why you have to combine it with market structure and flow. If there are a lot of bearish flow coming and there's bad news that showed up for Boeing, like China canceled the order, the demand zone's not going to do anything. It's just going to break. It just shows there's empty buy orders, right? Sorry, buy orders. And so it just tells you that's the area you want to watch. And if you can combine that with market structure and flow, that's where it becomes an edge for you. So, Tim, I'm going to move on with the chart now, and I'm going to quickly show them how I draw the zones. All right.
Okay.
So I'm going to pick Apple because everyone is familiar with the Apple chart. So, and this is what you're going to see a lot of people use to figure out what level they want to buy stocks at. So the first thing we do always is, let's pretend we don't know anything about Apple chart. We look at the long-term zones, right? So if you guys look here, everyone would agree that, you could say this is an area of resistance, right? Everyone can agree that we've had one touch, 2, 3, 4, 5, 6 touches here. This is where we keep filling. Now, in terms of supply zone, what we're looking for is a red candle, a green candle followed by a big sell-off. So I'll repeat it. In terms of supply zone, supply zone, think resistance. We're looking for a green candle followed by a parabolic sell-off. So in this case, we see this area here. There's a green candle, and then you see a sell-off. So let me explain it. Here you go. So this is what we call a supply zone. I'm going to go over it every single time. So the first time we draw this, we want to see if it gets tested and it gets failed. So the first time we drew this here, we failed here, then we failed here, and now we're sitting here, which is July 17th, and Apple's got earnings in a week. And what we're looking here is that we're stuck at supply. So what did I sell? What did I say? Supply doesn't mean that you just go buy puts blindly because you think the market's going to drop. You're just drawing the zone and then you watch the flow. So I'm going to give you a little bit more information on, I would believe, Wednesday and Friday. We had roughly 3 million, three different sweeps came in for Apple 165 October calls. It was a single order. It was an opening order. It was not part of a spread. So it was a bullish order. So knowing that, that's one thing you know. Second thing you know is Apple has earnings. So there's always an earning run up. Knowing that, you want to take this area very lightly because there's a high chance that we're going to break it. But this is how you draw a supply zone. Now, a couple of principles of supply zones. First is it must be a green candle and it must follow with a parabolic down movement, which I already told. Second thing is it needs to test and fail, which we've seen here. It's tested and failed. It's tested and failed here. And now it's testing. So that makes a supply zone. And the third thing, it's a basic principle. The more times we touch a supply and we stay there, the weaker it becomes. So in this case, we've stayed 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. We've had 11 touches on a daily, which means that this is getting weak. Based on what I've told you about flow and the market structure, July is one of the most bullish months, and the flow on Apple has been bullish. There is a possibility that this might break. So if this breaks, I told you that the flow was for 165 October. The next supply zone here is this one right here. Again, green candle followed by a big dump, right? We haven't tested this once. So if we are looking to short in the future, this is where we'll look. But in terms of if you have calls, once this breaks, there's nothing till 155.78. Again, this is a daily chart. So if you're sitting on a Tuesday and you're like, I'm going to go get Apple calls because Mo told me that there is nothing above 150.7 on a daily, it doesn't make sense, because if you're looking at a longer time frame, you need to buy more time. Hence why those guys are in October 165. And this is how it becomes their edge. Now, that's what supply is. I always start with longer time frames and then I go in shorter. So I know a lot of guys and girls here play weekly. So let's go check on a 30-minute how this would look different. So this is a 30-minute zone. And again, I'm going to continue with supply and then we'll go in a demand after that. So this is a 30-minute zone and we're going to look where supply is. I'm going to show you what resistance looks like, and I'm going to show you what demand looks like. So I'm going to just quickly draw a basic resistance line here so I know how far back I need to go. So this is a 30-minute time zone, and I see this supply. We got to make sure that the supply isn't broken. The moment we break supply, we have to delete that channel, which I'm going to show you. So this is at 150-266 on a 30-minute zone. So if you're on let's say a week out or 2 week out calls for Apple, this 30-minute or 1 hour will work. So we're going to make sure that this hasn't broken, because if it breaks, it means those orders have been filled and this supply zone is invalid. So it looks like we have not broken the zone, right? So now we're going to make sure that there's no other zones below it. So I'm going to zoom in to make sure there's nothing around here, which there isn't. So
Mo, real quick.
Yeah.
Lil Timmy Rogers got a question. He want to ask you a question. So
Sure.
Mo, when you say break the zone, do you mean a wick or do you mean a closure above or below?
That's a very, very good question. And I'm not just saying that because a lot of people can't differentiate between. In order for the zone to break, the candle has to close above the zone, meaning it cannot be touching. There needs to be a gap between the zone and the candle. If the candle is, let's say, touching it, let's go over an example quickly. That's a great question. So let's go 1 hour. So let's go over this. Let's go Let's find a good supply here. There you go. So this is a 1 hour supply, guys. If you look at it, and I'm going to show you how I draw it too. I keep forgetting that this is for people who've never done supply. So when you draw a supply, you never cover the lower wick. We cover the body and anything above the body. So once again, when we're drawing the supply zone, we're not going to cover this wick. We're going to cover the body and anything above this. In this case, we're covering, I'm going to zoom in. If you notice, we cover the body and then we cover the wick, not the lower part, okay? That's how you draw the supply zone. So in this case, if you look at it, we did not break the supply zone until this candle here. Going to mark this. Where is it? Yeah, right here. This is where we broke the zone. So I'm gonna, zoom in. This one is still touching it. So this is the candle that broke the supply zone. And when that happens, what you're going to do is you're going to delete the zone and you're going to move on. It's not like a supply resistance where you keep it. So that's how it will work. So moving back to, let's go 1 hour and let's see. So Apple's at 150. Let's see where the different zones are. So we're going to, again, we're going at the hour now. So we've got a zone right here. Hold on. Again, the move should be parabolic, and I'm going to show you the difference. So again, we cover the upper wick, the body, and never the lower wick. So this one here, someone might argue that, hey, this might be a supply zone too. On an hour, this is not, because it's not a parabolic move. The low part of the wick was 148, and you saw a green candle at 147. You should be able to see like this. Look at the fall here. This is a clear supply. So it should be a parabolic move down or up. This is not a parabolic move. And idea would be 3 red candles or more, but sometimes there's 1 red candle, which is massive, the size of 4 or 5 different candles. So a lot of that will come with experience. So this is a supply. Let's see, did we break it? Yeah, we broke it, right? Where did we break it? It wasn't this candle. It was this candle. And I actually made this play, and I called this out at 12:56, and it was at this candle. So let's look for the next supply for Apple. We're on a 1 hour chart now. So this is our next supply, like we talked about. So 154.60. So again, supply and demand alone doesn't do anything. You need to combine it with a couple of things. So now we got this on the break of this supply. We got the 152.5 for next week because it covers the earning run up, right? The next supply zone is until 155. So let's say we get to 155, and this is on an hour chart. Let's say we get into 155 here. You're looking to get the premium at roughly 3x. Now, it's a 1 hour chart, so you got to make sure there's no other supply zone at 30 as well. Because again, it's a weekly, it's not like a month out. We're not on the October call. So what is this? It's a resistance, right? So 150, 144. So you just draw it. Again, you need to watch the flow. If the flow is enough, resistance doesn't matter, supply doesn't. It's just key to know where to get in. Another problem that a lot of traders have is breakout trades. They want to take breakout trades. And the most amount of money I lost trading when I was new was breakout trades. Oh, Apple or Tesla broke this, let's get in. The reason why I would lose money is because I would think this is a resistance, and the moment we break, we're going to shoot. But instead, it wasn't a resistance, it was a supply zone. So there were sellers sitting up there. So as I was getting in, they were getting out, and I would get trapped in, because when a trigger goes off, meaning let's take an example. Tesla, $700 key area, 700 breaks, you get in, the premium starts juicing up, the IV starts going up, so you're paying more. And you can tell yourself you're paying more because of confirmation. You're paying more because a lot of people are watching the same level. They're getting in with you, raising the price of the premium, increasing the IV. And when the breakout fails, you're going to lose 40-50% so fast on a weekly because it was a failed breakout. It might back test and then go again, but most people will get kicked out. So that's why I stopped using 1 point level of resistance or support. I started looking at zones. And once a zone breaks, I'm out. And very rarely, when a zone breaks, does it ever reverse. And if it does, you can always get back in. But what you want to do here is, let's go back to Apple. Let's say you were going to short this, right? Because you didn't think we were going to break it. I would wait for it to fail. If it didn't fail, you just said, if it fails again, the person that asked the question, you want a candle where it's not touching the supply. There's a gap between, and that's when you enter. It might back test a couple of times, but that's where the entries, you can add more on the back test. But what you don't do here is, in this case, it broke the supply. You wouldn't enter puts here. You can't enter puts until. So those are some of the key principles of demand and supply. And sorry, supply. Does anyone have any questions about supply? I need to log into your YouTube, Tim, to make sure I can answer any questions about supply.
I'll pop them up on the screen.
Okay,
If they
perfect.
if anybody got, if y'all got some questions on supply, go ahead and pop them in right now before he move on to demand. Hey, Mo, I appreciate you right now, man. You giving out some major game. I don't know nothing about supply and demand. I'm over here taking notes. I know before, when you see me talk, you thought I talked to you, but I was talking to IG. But y'all hit the like button and y'all share this with a cousin, man. It's cousins out here that trade all different trading styles. Mark, get off my live, Mark. Get out of here, man. Hey, it's can you, what they say? Can you draw
Hmm.
it again? Can you draw what again? I'm gonna leave us on the screen on this one right here, Mo.
Okay.
Draw what? Draw which part again, Michelle? Michelle, a faithful Spider Gang member. I appreciate Michelle. We're here to learn and share. I know she. Oh, there she go. I know she in here. Draw what again? The supply or the when it broke. Which one? Which one you was asking to draw? Supply. How to draw the supply again?
Okay. Let's take a separate ticker.
All right.
So let's do 5 minutes. And we're going to pretend we're doing intraday trading. So here's what we'll do, because I know a lot of you guys want to do this. So I'm going to do this pretending that we're 30 minutes into the market. So this is Pacific time. So we open at 6:30 in Pacific time, and I'm going to play out the chart to see if I can find anything interesting for supply. So remember, this was Friday, and this is 5 minutes. So you see 716, 17 is the supply zone, and you get a parabolic 3 candle move, retest. It's a fail here. So again, you can combine a lot of different things. You see a long wick, seeing sellers are strong here. Friday, I want to make sure you guys understand, it was an OPEC day and a lot of pinning action. I was not trading intraday, but if it was a Monday or Tuesday, I would have just shorted sometime around here. So do you see how we failed here? Let me quickly draw a demand zone, and then we'll introduce demand zone. Demand zone is basically where the orders are sitting. So you look for a red candle followed by a parabolic move. So you have 1, 2, 3, 4 candles. So You draw a demand here. So this would have been a quick scalp.
Okay, so for clarification, based off the question that Michelle asked, when you drawing the supply zones, you include the body and the top wick, and but you don't include the bottom wick.
No. And when you draw the demand zone, you include the lower body and then the wick. You never include the top wick.
Okay, so supply is the body and the top wick, and demand is the body and the lower wick.
You got it. Yeah.
Okay, okay. Hopefully that answered the question, Michelle. And somebody else has said, when should you follow in? Wait a minute. When should you follow in break supply? Soccer 12s. I don't understand that. I speak autocorrect because it's 2022, but I don't understand what it's a when should you follow in break supply. I don't know. Ask the question again. Look like you left something out. Let's keep pushing on, Mo.
Okay. So I think I get his question. He's saying, when should you get in? Look at this. We never broke this. One, two, three, four. So if you got in, you would have been chopped in. Another thing, OPEX is usually pinning action. So look at the difference between, so demand, I always do green zones, and supply, I always do red. So the difference between demand and supply is $2. So I wouldn't have traded this, but I wanted to show you. Let's see VIX. So we've actually made this trade multiple times last week. So this is the daily of VIX, right? This is a daily demand zone. I'll tell you why, how I draw it. So lower body, lower wick, upper wick not covered, followed by a parabolic move. Boom, boom. Like it went from 24 all the way to 34. This is what like I love about supply and demand. So, okay, so that's one demand zone. What's the other one? This one right here. Lower body, lower wick, straight up. So these two candles are good enough for me to call it a demand zone. I don't even have to. So that's what I meant. Sometimes the candles are big, so you don't need to count three candles. In this case, it worked. Then you've got the top trend line, got the bottom trend line. So this is why I also think we might rally this week for, let's say, half the week, because we're on the demand zone three times now. First time we shot up, second time bounced off, third time we're here. And this time we pushed all the way till the mid, which means that we've eaten up half the demand here, right? So if we break, we don't have any other demand zone, any other resistance till 21. Again, if Wix drops, means SPY skyrockets, which is why we saw everything adds up when you understand the market structure. SPY looks good. There's a lot of calls SPY coming. Apple coming in for October. VIX is going down. So everything's coming together. Now, we've tried breaking the trend line. We couldn't. Trying it again. Monday, very key where the candlestick opens. If we enter below the trend line, that's your first confirmation. Then if we close below the demand, you can get a squeeze into supply, into SPY. So let's see how we would do supply here.
Okay, right before you draw that supply, or while you drawing it anyway. But look, Timmy Rogers got a question. So Mo, looking at the screen right here, I see you got two demand zones on top of each other. Is that possible to have two stacked up?
Yeah. So what we're saying here, Tim, is buyers are keen to buy at this price level, and then buyers are here on this level, and it's based on this parabolic move. So you cannot have a demand that's broken. So for instance, let's see if there's a demand zone here. Let's pretend if this was a demand zone here, we broke underneath it, you have to delete it now. Since we haven't broken it, this is valid. The moment we do break it, you delete it. It doesn't become supply. It doesn't become anything. It just goes away because the demand, those orders have been fulfilled and they're gone.
Got it. Got it.
So let's go back. And this is something that I think it's worth mentioning. When you're drawing the supply, go look for where it originated from. So did it originate from here? No, no, it originated from here. So this would be your supply. So we retested and failed, which confirms that now this is a supply zone. We never got to it this, but whenever we go up in terms of VIX and supply goes down, this is the area you want to watch for. That's basically it, man. But any questions I can answer now.
Okay, okay. So, supply and demand. That's basically it. I was taking notes in between talking to IG and telling IG to come to YouTube. um, I say, when should you follow a breakout? Oh, it meant like, when should you follow a breakout? Okay, that's what the question was. When should you follow a breakout?
The breakout should be followed when the candlestick is above the supply. So let's pretend we don't know supply and demand. We only know resistance. You can draw resistance here, right? Tim, where would you draw resistance if you had to?
I would try to get as many bodies as I can right there where you drew it.
Okay.
Like I try to draw it in where I get as many bodies touches. Like, um, you can't see mine. Like, if you go up a little bit higher, like high up to that top wick up there, like keep
Here?
going up, that wouldn't be like resistance to me. It'll be, the
This?
resistance would be like lower down there where you had it, and I'll try to get as many body touches as possible.
Agreed. That's how I used to do it. So what would happen to me, and which happens to a lot of people here, is our goal is to get as many bodies, and I would get in right here, but I didn't know there was supply here. So I would get in here, get trapped, and then get stopped out. So even this itself is doesn't mean you should get out. You should, sorry, get in. You need a candlestick above it. That is the true test. If you get in just because some a body peaked up or a wick peaked up, that's again a trap. You need to wait for it to form a candle above it that's not touching the zone.
Okay, and that's when you follow the breakout. Once you get a
Mhm.
candle outside of it, then you follow the breakout. Like, okay, so soccer 12. Hopefully that answered your question. Wait for the candle to get on the outside of the zone to follow the breakout.
Tim, honestly, I don't even take these trades. My goal, if I was to play this, and Mark knows this, would be to somewhere get in between on the demand,
Well,
because that's
Mark don't really know nothing, but yeah.
because that's where the premium is cheap. So even if we have a failed breakout, we'll still up like 50 to 100%. The moment you get around this area, IVs are jacked up.
Yeah. I'm glad you said that. See, this what I was saying, people, about like all of it is like first cousins. Y'all see what Mo said, he not gonna take it up there when it break out the supply zone. He gonna wait for it to come back to the demand. I always say I wait for it to come back to the discount market. If I go off the premiums and the discount, above the 50% of that leg, you paying premium. When it come back down below 50% of that leg, you getting into the discount market. It's all first cousins, people. I hope y'all taking notes. We got some more questions. What else we got in there, baby? You see anything else? She said no. She said she don't see no more questions in the. Isn't it too high, right? Isn't what too high? Somebody said isn't it too high, right? Venus, what isn't what too high, right? Because okay. Oh, I'm sorry. Go ahead, do your job, baby. I'm sorry. Because it's a trap. I walked away for a while. I'm lost. I don't know what isn't what too high cause it's a trap. If we buy at the top. Oh yeah. Buying it. I don't play breakouts. I don't
Yeah.
play breakouts. I never buy at the top. I know people who play breakouts. Breakout is a gamble to me because it's like I wait for the market to give me a clear sign of what it want to do. And like even if we break out, I wait for it to break out for a while and then come back for a retest. I'm a
Yeah.
retest type trader. I always, because I want to pay the discount. I always wait for it to come back to a premium. So it's like it's not necessary. I wouldn't call it a trap. I just, it's not my trading style. I prefer to wait on the discount. How
So
about you, Mo? What you got to say about that?
no, Tim brings a very good point. So almost every single time we have a breakout, there's always a back test, which you can call a retest. The only time I've seen that doesn't happen is if there's some sort of news and buyers are just getting into FOMO. And when there is a back test, IVs get crushed, and that's why Tim gets in because he's getting it at a massive discount. Because it might be even higher than where Tim wanted to get in, but the premiums are now even cheaper because a bunch of people got trapped on the back test. And because they got in when the IV was high, they're down 40-50%. So when they start getting in, it's a panic drop, and IV drops a lot. And that's when Tim probably gets in. And if it reverses, the IV gets jacked up again. It's a very quick and fast trade.
Michelle says, so if it breaks through supply and no longer touches, we should wait for a retrace.
It depends, right? Like why? Like so, if you're playing SPX, right? Um, and it's on the news, like Biden news that came on Friday that he made a deal with the Kings and all that. I knew was bullish and we'd get it. I got in right then, right? It would be a quick 10-15 minute scalp. If you are swinging, you want to, that's what I'm trying to say. You need to look at so many different things. One indicator alone doesn't help you. So just because it broke supply doesn't mean anything. Is there flow for it? How long is your chain for? What's your strike price? All that matters.
When hold on, I'm glad you said that, Mo. Hold on before you put something else up on the screen, baby. Y'all see what Mo said? Mo said you got to look at so many things. He said he saw something where Biden said some stuff, and he got in for a quick scalp. You know what I always say for the way little Timmy Rogers trade. Know the narrative. What's the narrative that's going on right now? Economic, any kind of narrative. Know the narrative first. Once you know the narrative, what's the bias for your time frame? What's the weekly bias? What's the daily bias? What's the hourly bias? Whatever time frame you on. So know the narrative, know your bias, then look for your setup. You see what I'm saying? Just like Mo said, there's so many things you got to look at. It ain't a cookie cutter thing out here when it comes to trading. No matter what your style of trading is, you got to know the overall picture. All this stuff, first cousins, man. Mo saying the same thing that I be saying. He just saying it in different words, but it's the exact same stuff. No, he says a lot of stuff you got to look at. So it ain't no cookie cutter. Sometimes it may be wait for the retrace. Sometimes the narrative may be it's a fast moving train. Jump in now. Like he said, he jumped in for a quick scalp. So know the narrative, know the bias, then look for your setup. These gems, I hope y'all taking notes. Are you using level 2 data to confirm your supply and demand areas? Not sure if you covered this already.
So, Jordan, I'll put this simply. I like to trade simply. So, what I'm doing is you can use TradeText, Cheddarflow. I know maybe a handful of people who know how to read the tape accurately. I don't think I know how to read it accurately. It's one of the hardest things to do. Easiest things for me to do is, let's say I'm trading SPX and I'm looking at weekly, 2 day out, 1 day out sweeps for NVIDIA, SPY, or anything that contributes to SPY. So let's say I see sweeps for Apple, Microsoft, my bias changes. And I'm looking for directional order. The biggest problem with flow is 43% of orders come through dark pool. And this is by SEC. I'm not making this shit up. And if 43% is done in dark pool, you might just see one leg of the trade. And a lot of stuff we see, and me and Mark talk about it all the time, is either done for engagement or it's to sell you a course. And that's honest truth. Because supply and demand is good, but by itself, it's nothing. What Tim told you, like there's a bunch of shit that you have to look for. And based on what your skill set is, you're going to lean into something more than others. But at the end of the day, the only thing that matters in this market is risk management. That's it.
Yup, yup. You see anything else in there, baby? Yeah, make sure you got your stop loss. Yep. Risk management. That's it. Mo just said it. Um, yep. Shout out Larry. We got Larry, awesome trade in the thing. Larry said he played the breakouts and reload at the retest. It's all about your trading style.
Yeah.
Larry is a phenomenal trader. So it's all about your trading style. It's all about your risk management. And even the best trader gonna take losses. So you got to have stop losses. Don't try to use mental stops, because it don't nobody like to lose, and you're gonna talk yourself into a really bad position if you don't use a stop loss. You gonna think, I'll come back, I'll come back, I'll come back. We've all been there. And the worst thing that can happen to you is if you fight the market and win one battle, because the market, you ain't gonna win the war with the market. Trust me. um well, we at 40. We at 45 minutes. I ain't seeing no more questions coming in, Mo. I ain't gonna hold you up. I appreciate you, my
No
brother, for
problem.
pulling up, sharing this. This was a gem to me. What I want to do right now is give you just a moment. If you like to, if you don't want to, you don't have to. But if you want to talk about OTB or your mentorship or anything like that, I give you a couple minutes to talk about that if you want to. I'm gonna close my mouth for a minute and let you do what you do.
Um, the only thing I would say is most people know that I run a Discord and I have like mentorship exclusive groups for people that actually want to learn how to trade. But more importantly, the only 1 minute that I want to take from you guys is take trading as a business. A lot of people I meet, and it breaks my heart, they're using this to gamble their money. Please don't do that. And don't buy into anyone's BS that there's one magical indicator that's going to make you $1 million. I've been part of 5 different Discords. This is what I do, live and breathe. I've been part of groups that had 10,000, 15,000 members. And I'm telling you right now that the only people that can make money are the ones that can execute for themselves. No call out, no group, no amount of any magical indicator is going to get you there. It's all you. There's people that will take my call out, will make more money than me because they know how to execute. And then there's people, I can tell you, I can do 10 callouts perfectly, and someone's still going to lose because they had no clue where to enter, where to exit, and they're relying on me. I'm not perfect. I make more mistakes than I actually do good. But the part is risk management. I'm going to keep talking about it. Risk management only comes with one thing, which is discipline, which is what Tim just told you. He doesn't take breakout trades because that's not his thing, which means he has no FOMO. Because if he has FOMO, there's no way he's going to avoid breakout trades. When I started journaling, I looked back and most of my losses came from breakouts. I would take breakout trades. 10 out of 4 would work. The 6 would just take off all my profits, even on the good trades I took. So one of the things I started doing is not taking breakouts or putting in very small amount with very wide stop losses. Because what ends up happening is it does back test. And like the other guy said, he probably averages down, which is something that never worked in my favor. I would just have a longer stop loss and then I would just wait. And for the bounce, if it didn't, I'd get out. But that's it, Tim. Nothing more to say.
All right, I appreciate you, Mo. Again, Mo is OTB Clubhouse on IG. Matter of fact, let me go to his IG page. Um, Mo, even though I found out about Mo through Mark, you know what I'm saying? Me and Mo ain't never really sat down and chopped it up, but just, I know Mark. Me and Mark buddies, we just like to go back and forth. You know what I'm saying? But and he's a good judge of character. And just listening to the way Mo talk, I knew that we, you know what I'm saying, we was like on one accord when it came to this stuff right here. And this is history in the making, cause I ain't never brought nobody on Tim's Tidbit who I ain't sat down on the phone and had a conversation with. This was strictly off of um um because of Mark. It was like it's just coming on because of Mark, because I trust his judge of character. Why ain't this showing up on my screen? Um, Hold on for a second. Oh, because I probably had the wrong thing up there. I'm looking at my YouTube channel, trying to figure out why it ain't showing up on my screen, but I still got your screen shared, Mo. Hey, there you go. Boom. Instagram, OTB Clubhouse, right there. This is him right here. If I'm not following him, and if it don't look exactly like this, OTB Clubhouse, one word. If I ain't following him and it don't look exactly like that, that's not Mo. You know what I'm saying? The handsome gentleman in the double-breasted $75,000 suit right there, that's Mo right there. If you click on his Linktree link in his bio right there, you can see the mentorship wait list, The podcast that he do with Mark from Trader with a Dummy and some other stuff. You know what I'm saying? Pull up on him, support the man, follow him on IG. Him and Mark be doing the YouTube videos with the what is it called?
Market money.
Market money truths. And they be on there, they be on there breaking it down for real, man. I like watching I like watching their videos. They be on there breaking it down for real. They all straight, no chaser. All straight, no chaser. And that's what I liked about him. That's why I reached out to him. I reached out to Mark. I said, hey, you think Mo will be willing to come on and talk about supply and demand zone? Because I know a few of the cousins in the spider game be saying stuff. I be like, I don't trade that. So I reached out to somebody that I, you know what I'm saying, felt was like a expert on the subject. Since everybody want to be gurus, I reached out to the guru. You feel me? I always say, plus I'm sure he would never hop in your DMs and ask you. Shout out to Kel, man. Kel be in here. Hey, that's true. He ain't gonna hop in your deals, ask you how your trading going. He ain't go, hey, how's your trading going? Well, if you send me this right now, I can take your trading to the next level. Hey, Mo. Hey, I ain't gonna hold you up no more. I appreciate you for pulling up. Hey, do me a favor, y'all. Y'all hit the like button and share it with a cousin. Share it with one cousin you like. Share it with a cousin you don't like, because we want all the cousins to get this free information. Right now, I just looked at my YouTube channel. It say like 66 people watching, and it's only 36 likes. And one of those 36 is me. So hit the like button, hit the like button, hit the like button, share it with a cousin. Since we had the homie Mo on here doing the Tim's Tidbit takeover, we not gonna do the what's coming up next week today. We'll break that down either in the morning with the overnight price action or at 6:30 tomorrow evening. I appreciate you, Mo. I appreciate all the cousins pulling up. Y'all know what it is. I'll see y'all in the morning at 9 o'clock. Gone.
All right. Yep.